Welcome back, traders. Welcome back. This is Digital Wealth Academy, and this is our monthly market review. So we did this every in the end of the month, and also we create videos for daily market review and all that. So if this is your first time stumbling on this page, please do make sure you subscribe to this channel. Turn on your notification so that you can get my daily tips on my so that you can get the daily tips on the you can get the daily tips on Euro US dollar and DXY. So before I continue, I want to use this medium to say a big thanks to those that have been consistent with my channel and with me with us. So um thanks for your support and all that. Thanks for everything you've done. And also, I want to say that a little word of encouragement to my viewers that as long as you keep doing this, you stay consistent, you do what you have to do, you put your effort in, surely you are going to get the roots. You are going to get the reward for your efforts. All right, because one thing is surely on this market that at the beginning you are going to put enough effort at the beginning, but surely it is going to worth it. So, um, without wasting much of our time, let me go into what we have for this month. And also, before I go into what we have, I want to actually tell you guys about the state of the market. All right, because one thing is very important as a trader. You need to know the state of a market before you can propose your own theory about what you want to see in the market. What I mean by that statement is that we need to have a baseline where what is the situation of the market? Are we in a situation where the price has been giving us big ranges, has been moving towards the specific direction, or are we in a situation where the market has been on a consolidation, or are we in a statement where the market is low and is been trading on a range? So that's it. And the current phase on the monthly contract is very clear. We all can see that the market rallied over impulsively, sweeping all the sales and liquidity, and now we rally and we have been ranging on this zone. This is a ranging market and also known as consolidation. Others might call it accumulation, depending on what context you want to view it from. But we have four elements of what price action, and those elements are consolidation, expansion, either retracement or reversal. That is, there is no consolidation retracement. There's always consolidation expansion. Now, it is now either expansion or it is now either retracement or reversal, which is three things. So there is consolidation followed by what? Expansion. That there is no consolidation retracement. There is no consolidation reversal, but there is consolidation expansion. Then it is now either after it expand, then we could now have a retracement or a, a reversal. All right. So that is the four elements to a trade setup, and that is the relationship they have. So if we are in a consolidation zone now we want to the mystery behind is that we don't know whether the market is going to leave when we know it is going to surely leave this consolidation. But when is it going to be? Is it going to be next month? Is it going to be even this year at all? Are we going to be trading inside this year? Are we going to be trading on this range in the whole of this year? Look, the whole of 2023 was on this range. So anybody that trade and make profit 2023, kudos to that person, because it is not easy to determine price action like this. That is so uh, fractal. All right. So so like that is just it. Because when you're trading, you need to be able to look at the condition of the market. So a lot of people might have take irreversible decision here. And you look at, imagine when you're trading on this kind of market, eventually you will do well than the average person. All right, you will do well trading in this kind of situation than in this kind of situation. But nevertheless, we still do trade and we still do make profit within this range. But what is there is that don't have myopic expectation, especially when you are on a ranging market like this. All right, so like you thinking that the market is going to spoon. All right, just like we have called out last upper month. If you go back, or if you really want to learn, you could go back and search for the month of May, which at the end of that month, sorry, the month of April, which is this month, what the video I did and what I was looking for and what was the baseline for it. Now I still remember because I do watch it on yesterday. Or I still have a written statement for that month. And I just go back, read it. Okay. After reading it, I was like, okay, this is where my mistake was, and this is where I could change. This is what leads to the cause. And so I do review my trading, all right? I review my trade, especially my journal. I do review it during the weekend. Like I have the video I did last week, I have a written word, just like I have done for this month. So I will eventually read for you what I have for next month and what how market delivered this month. So I go back and review those things. Then after the market deliver, okay, this is where I was wrong, this is where I did not take cognizance of. This is where I okay, or the market will surely do its thing, regardless of who you are or what you think or what you see or what you feel. The market will always do its thing. So I like okay, since the market will always do its thing, this is how it's this one is inevitable, right? So, but let's try to be more accurate than we are not. So, if that should be the case, we know that we are on a range. And last month market review. I did mention that I'm looking for euro to price below this area because we have already created a swing high here, and we should not have any swing high again till we get here. But now the reverse is now the case. We price into sorry market price into a daily time frame fair value gap, or also known as BC and inefficiency, which leads to all this price move higher. And now we have taken previous month high on this week. And because we are on a consolidation, the let me not talk about what what I'm expecting next month, but let me read everything. After I have gone through what I have here, then we now do general conclusion. All right, general conclusion, and just tell you what I favor most and what I also anticipate it will likely happen. But you could have a condition for the market that okay, this is what you support more, but what is the market? The market will always do what it's going to do. We are not the smart money. The smart money are people that trade that already know because they are the controller of this market. We are just following their footstep. All right, we just learn to follow their footstep. So you guys to be wiser enough to not hold or myopic expectation. One, don't be don't put your willingness on price. Don't say price must do this or it must do this or must do that. Just follow its footstep. So if you are following somebody's footstep, you don't need to calculate where the person will what the person will do in like in a week to come. Where will he put his leg? All you have to do is that wherever the person remove his leg, you put your leg there. Remove his leg, you put your leg there. You are following that person's footstep. All right. If you put his leg in a hole, you retrace. Because but if you are trying to overshadow that person, you're trying to look more for that person, it is going to jeopardize your own because you might mistake for it. But sometimes you can get lucky. But how lucky are you always going to be? So, before let me just get into what we have for this month, and I'll read the statement here. So, we can see that this month closes above this candle, all right, making this candle a swing low. And what do we say about this kind of two combination of candle? Whenever a two combination of candle is like this, that means the third candle is more likely to be going higher to follow the second candle. This is the first, this is the second. So the third candle is more likely to follow the footstep of the second candle. But there is a condition for that. Just like what happened here, we have a down close, but the next one follow up with it did not even close above this. But the third one, what did happen? It follow its footstep, and again the next one closes. Now when we have this kind of two combination, what do we expect? We are supposed to see another black candle, but what happened? We see an up close candle. Now there is a condition for all these price moves. That's why you need your lower time frame, because your lower time frame also have effectiveness, but your monthly time frame or your higher time frame tells you the macro perspective, all right, but the lower time frame show you the market footstep and probably what to look for. So that is it. The Euro-US dollar monthly contract for the month of May 2024 delivered as an up-close candle, sweeping previous month's high buy-side liquidity and rally higher, making a new swing low with April month candle. Meaning that we this month, which is the month of May, we open rally a bit lower, rally higher, sweep what April month high. Now that and close above it, making this April a swing low. Alright, so we have a swing low and a swing high. If we have something like this, that means that on inside of this whole range, we have a new a very important range in price. Alright, which is these two range, meaning that we have swing high and a swing low. What does that tell you? We have a new tight range. All right. So if the market come for this buy side, where will it go? This sell side. So what I'm looking out for next month. So this theory already sets me for already set me for a baseline, already give me a baseline to what I need to look for. Next month I'm going to anticipate for previous month high to be taken, then consequently we price might seek this liquidity before going lower. So if that is the case, we might first uh support the idea of price coming for this area. Then after it has taken this area, we want to see its willingness, or we want to see it tip its hands to us to where it wants to go, if it wants to come to this lower or it wants to keep going higher. But remember, we are on a range, so don't expect market to give you unrealistic result. Now, on the monthly contract, we can see that Euro opened straight lower and did not sweep previous month low, and price rally higher, sweeping the previous month high and close, just like I have explained. Inversely with the XY, so I need to go to the XY because the XY on its own has a more criteria in price that we need to support our Euro trade or our Euro review. Inversely with the XY fails to sweep previous month low, which is the April low. The XY fails to sweep this low. If Euro sweep high, the XY is supposed to sweep low, but now the reverse is the case. And the market close, that means the XY market close very close to the April month candle 2024 low, indicating a willingness on the XY to seek both the April and the new May candle low. That is, this month that just closed is our previous month low, which is our sell side liquidity and buy side liquidity. Look at how this is relatively equal, making that an area of what liquidity for market to seek for. And now we have another relative, I mean, we have relative equal low, relative equal high. So if we take these equal lows, we are going for this equal high, and that makes this one a range as well, because we have swing low here and a swing high here, or we did not take that one either. So if we have these two area in price, for the market to go higher, we see that this is the 50% region of this range now. So if this is the 50% of the range, then we want to see markets come inside of the discount. That means after taking this sell side liquidity, we want to seek for any discount PDRA that is around this area. Then we want to use it to price higher. So that is the baseline for my setup, but we will have to go on a lower time frame to confirm more on that. Now, looking forward on Euro, let's go back to Euro. Casting forward, I am anticipating. So, casting forward, I am on Euro, I am anticipating for price to seek May 2024 candle high, which is the May 2024 candle high buy sell liquidity, and the price of March 2024 candle high. If the overall monthly contract is bullish for Euro and also DXY to seek March contract low candle low. Now listen carefully. If the overall market is going to be bullish, I'm anticipating for the next month, which is June, to seek for both this May high and this March contract high. All right, but if that is not the case, if we seek the high and we close above it and there is still willingness to go higher, so we're going to, after this high on a lower time frame, we're going to look back within this high and this high, which PDRA is here that will support a reversal in price, or after this high and within this high and this high, which PDRA is there that, especially on the daily or 4 hour, that supports a reversal in price. It is very, very important because we are on the range. So we just go into discount, come back into the range, so until we eventually leave that range. That is it. And that's it. Now, I want to talk about the monthly profile, but I would like to go to the weekly. Let me just stick to the daily. Let me just go to the daily. I want to use something to explain to you guys about the monthly. But before let me do that on the XY before we come back to Euro. Yes, I want to show you guys something. We are learning, not only to come and say English here. We are here to learn. So, and the only way you can learn, if you learn past price action, you backtest. So what I'm doing here is actually what is called backtesting and forward testing eventually, because I will tell you about the previous month. I'm telling you guys now what happened this month and how the market delivered. That is backtesting. You looking back in price, see how market delivered, examine it, see how you could have react in some aspect, and see where you know you made a mistake. Then you join all those things together, you make use of it. Likewise, when you are forward testing, you are like, okay, this is what I'm anticipating for. You write them down. After the market has delivered, you review what you write, see where you are wrong, and now check over time, are you always wrong in this way? When you expect this kind of thing, are you always wrong? If you are always wrong, that means the theory behind that, or the hypothesis for that kind of price delivery, is always weak. So you now tend to what, enhance and change your views sometimes. So let's go on the daily time frame and see the market delivery for DXY for this month, because I want to talk about the market profile and I want to be using the daily for that. I want to, it's the monthly price delivery and I want to be using the daily for that. Now, the monthly profile for DXY using the daily contract as the base. or as the yes, as the baseline, shows that on Wednesday, 1st of May 2024, down close candle formed the high of the month. That is, at the opening price, the month opened and seek sell side liquidity. The monthly candle low is formed on Thursday, 16th May 2024, which is an up close candle that falls short of the weekly BC and reprice higher. Now, that is the high and the low of the month. Now, let's look back. This is the high of the month, but this high failed to take this high by an inch. Look closely. The high of this particular previous month high, which is April high, the high is at what? 106.169, and the high of this month is at 106.66, and this one is 69. So 66 and 69 is different. So that is, this one is higher. 69 is higher than 60 by 3 ticks. 3 what? Ticks. So that makes this area a very sweet equal high, because what the retail see is that equal high, and when they see equal high like this, they want to use that as their baseline or their area of liquidity. And now look at the unicorn model. When I was going through this thing yesterday, it's just everything just aligned with me that at every month, all right, you will want to put a line on your chart like this. All right, you want after putting a line on your chart, you want to deline the beginning of the month and the fair value gap that was formed and all that. Look at our unicorn model that we look for on a daily time frame. Look at it more clearly on a monthly perspective inside the daily time frame. Look at a break in market structure, shift in market structure that creates a fair value gap and market retest, then we deliver lower. It's deliver not us, the market deliver lower. So the low of the month is formed at this particular day, which is 16th May 2024 candle low, and price retrace higher, getting back to this area. And what happened? We create an inducement, or what is it called? This market failed to tap on this very short block. Now we have reused that, and as we reuse that, that makes this place another word equal high, and having this equal high, buy side, buy side. So that makes this whole area very sweet for a draw on liquidity on a daily time frame in terms of what? Monthly view. So we have price trading here currently. If you want to know about this Friday market review, I have already posted it since yesterday, so you can go back and watch it. All right, watch the Friday 31st of May 2024 contract price delivery, so you can see that. So we have this low here and this April low. So I'm looking for these two relative equal lows to be taken this month before price go higher. I want you guys to see a mystery behind price action. Every month, if we are bearish, we will take buy side to go lower. If we are bullish, we will take sell side to go higher. Look at this month. The month of April is bullish, right? What happened? The month take what? A low. You take this low, this low, this low, right? This two low was taken before it goes higher. This high take all these lows before it goes lower. So that has given me a very good background to support or to feel that if the market take these lows and price into this weekly BC, which I've just mentioned, or eventually we might get into this daily inversion fair value gap. But if these two things fail, that means the market is seeking for this sell side and this sell side. So we have these two PDRAs now currently in price, and also a liquidity. Liquidity is also a PDRA that after it is swept, if it's a liquidity port, it will reverse. Then the bias I support most is market to sweep those liquidity and reverse. because this baseline of it coming down, I don't support it that much. But any after taking this low, then I want to see what will happen next. But I because I don't want to put all my will on price. Now after previous month low and April month lows has been taken, that is those sweep liquidity has been swept or taken, it's important to wait and see if the XY is willing to reprice higher and seek buy side liquidity, as we now have clean equal highs above each other. This high, and this high, they are above each other, and they are all what sell side, sorry, buy side liquidity. So we want to know, like, we want to stay off the market after this sell side liquidity has been taken. Very, very important. So similarly, let's go back to euro on the daily contract, right? Similarly, euro monthly profile shows that Tuesday, 7th May 2024 formed the low of the month that fall short of the previous month low and continue higher price delivery. The high of the month for euro is formed at Thursday on Thursday, 16 May 2024, that sweep previous month high and rally lower inside the previous monthly range. The low of this month is from here. Look, the market open, sweep the liquidity here, alright, price into what? A bullish order block, which is a PDRA, and what? Rally higher. What happened? We sweep liquidity. This is a unicorn model with shifts in market structure, retracement into the order block and the inefficiency, then the market deliver taking this or high. Like you could see how many pips it is. All right, I don't want to even say days from here to here to the previous month high. That is how much liquidity. That is how much pips. That is 151 pips for the month. On it will it all happen in 1 week. So very, very sweet. And the high of the month is from on 16 May 2024 that sweep previous month high and rally back, which is a down close candle on the daily time frame. And the market continue consolidating until we close. Look how this thing deliver a form of what? Daily candle. Look at how the month deliver. Just the way daily deliver. The daily we open, consolidate, manipulate. What happen? Go higher, take our liquidity, come back into the daily range and close. Look at this month. Consolidate, manipulate at the opening, go higher, retrace the liquidity, shoot up, and what? Close inside the range. Now this is now the new consolidation. The market will open, spoon, either take a liquidity, spoon higher, or if we did not take liquidity and we continue going higher, that means we are going to take this liquidity and come lower. That is just the baseline. Simple as that. So don't stress yourself and don't have a myopic expectation. So casting forward, I am anticipating for euro to seek previous month high and also the buy side liquidity at 1.09427, which is this buy side liquidity if we're bullish. But if the DXY weekly BC, that BC I just I just show you guys, if that BC support price higher, then euro will begin to deliver lower. So much more importantly, we need to look at the DXY, how the DXY is delivering. That will give us a head start to you know what we want to look out for on euro. So going to prepare for next week, and this is the weekly uh journal. All right, this is now we are done with the month. Let's come back to the week. The first week of this month formed the low of this month. So yeah, and this the third week from the high of the month. Okay. Alhamdulillah, 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 alhamdulillah. Um, thank God for life. Yeah, thank God for life. So please don't be in haste because I'm trying to, you know, just do what I have to do in the best way I can. So that is it. And this is the weekly contract for Euro and also the last week of the month for May 2024. So the Euro US dollar weekly contract for the fourth week of May 2024 deliver as an up close indecisive candle. Sorry, deliver as what? An outsider an outsider weekly candle that is that that is an indecisive candle, meaning that this candle takes what previous week low and previous week high and close indecisively after pricing from what a fair value gap. On the weekly contract, we can see that euro price sweep both previous week high and previous week low and what respect the weekly fair value gap or BC and price higher. Those giving price willingness to want to seek buy side liquidity. But how far can price rally after taking previous month high is the mystery remain unsolved until the SY tips its hand. Simple as that. We already know that we have reject from what a fair value gap or a PDRA. Now we have go at the price has delivered higher and closed indecisively. Now when we open next week, we going to like next week bias is bullish to me. The next week candle I'm looking for a bullish price scenario, right? So I'm looking for a bullish candle for next week, which is the first week of June 2024. So if we open, I want to see prices rally lower, then continue going higher. We take buy side. So after we have taken this buy side liquidity and all up to this level, then I can now look back or go and check what the XY is willing to give us because the XY will set us the baseline to what to look out for. If the XY is willing to go higher, then we can now fully that should be sure that euro starts coming lower. So this is the new range which I call out for you guys then on the monthly contract, which is this range. All right. So no, is this range here and here, this high and this low. So there is liquidity here, relatively previous month low, April low, May low. And what one here and the other one here. So if this one take this one, so that makes it a very good one. Now let's go to DXY weekly contract. Similarly, now DXY has more on price than Euro do correctly. Similarly, DXY has shown willingness to price lower after it has repriced into the weekly bearish order block that has been refined to a daily bearish order block and price rally lower with the April and May low above the weekly. So April and month low above the weekly BC simply means that price could trade into that area of interest and either respect it or trade below the weekly fair value gap and what the weekly plus or order block. Look, we have a bullish order block here, this one. All right. So how many PDRE do we have here? Almost 3 PDRE. The weekly bullish order block, the fair value gap, and the daily bullish order block. We could even see that there is an inversion fair value gap between this week and this week, but which is more refined on the daily. That's why I put it on the daily. So having this PDRA below the liquidity we are anticipating for price to seek. So when we open, what I'm anticipating for is price to open, deliver higher, then seek, which is next week candle. What I'm talking about now is next week candle. I'm done with proposing my next month candle, which you already know. Now we are proposing for the next week candle. So what I'm suggesting, or what I'm proposing, anticipating for, is price to open, rally higher, deliver lower, take this relative lows and or relative liquidity before continue higher to seek this relative equal high here on the weekly time frame. Or if we reject and we did not and price did not respect this order block, then that means that um the whole price scenario is wrong, and price might start to, you know, give us what we are not expecting. So until price gets here, our draw on liquidity is this area until price gets here. All right, so that makes it a good trade. So let's go to the daily time frame and use, sorry, before going, we need to actually uh put a line on this week. So because I want to talk about the weekly internal price delivery for this week. So we see that this week deliver as a down close candle for the XY. We open, consolidate, on Tuesday manipulate, Wednesday deliver towards the weekly draw, taps on the bearish order block. On Thursday, price sweep Wednesday high, taps inside of the bearish order block and rally lower. Now this bearish order block is now, it has been used and does no longer hold. If you understand what I mean, it has been used and does no longer hold. So for that reason, I will take it off. I will just leave it because of the video. I will take it off and make that a new area of draw of my for my draw on liquidity on a lower time frame. So similarly, when we go to DXY, when we go to Euro, we have our Monday here consolidate, Tuesday manipulate, and Wednesday deliver lower, taking this equal lows. Then Thursday take this low, deliver into the bullish order block. You can see this daily order block. This is a bullish proportion block or whatever you call it, but it's an order block and order block, and deliver higher and close here. So this whole price delivery makes it that, okay, imagine now, just a hypothesis, since we have used all the necessary PDRA that might oppose price if price decide to start coming lower, all the necessary PDRA that might oppose price has already been used. If we start from here, all right, when we first trade here, we have inversion fair value gap, we trade into it, we use it to come lower, deliver, and what, close above it. That makes it an inversion fair value gap, leaving us with a bullish order block. Now this order block was reused here and the fair value gap was achieved here and deliver higher. Now making this down close candle an order block, creating a fair value gap. So, and also a shift in market structure. Price now retrace lower using that order block. After trading into that order block, we spoon higher, making this down close candle a bullish order block. Now we have used that bullish order block. And all this fair value gap has been filled. So there is no longer unfilled fair value gap here. All right. So that shows that this whole market delivery here is efficient. And when price is now trading lower, it will no longer be an opposing to the draw on liquidity. So we have this uh, as our initial draw on liquidity for next week, and these two will be the most draw on liquidity for the XY, for Euro, sorry, and until the XY tip its hands to us on what it wants to do before we have a conclusion to what we want to know on price. So that has bring us to the end of this monthly market review. I hope this video was insightful, and if sure, in short, if you did learn something from it, please if you did learn something from it, please do subscribe to this channel. And sorry for this interface that I'm about to show. It's just that I discovered that if I record my whole screen with this software, it is more clearer than using something than using just than integrating it the other way. So have a nice trading week and a nice trading day. Until Monday or until Tuesday morning before I give you guys a Monday market review. So on that case, thank you and thanks for watching.